Hello, welcome to Elements in Focus. This is a special edition. We're going to address a couple bullet points of the One Big Beautiful Bill Act that was just recently passed. There's over 900 or close to 900 pages of stuff inside of this bill. And so we've dissected about 5 key areas that we want to talk about during this Elements in Focus. There's a lot of things that took place on the business side. If this affects you as a business owner, we will address these in your family update. Where we're going to focus this morning is on just the 5 things that can affect our families in tax planning. And so as you can see on the screen, there's a couple things that we'll walk through and address this morning. Sam, anything you want to say before we get into some of the nuts and bolts of the BBB?
It was signed on 4th of July here, and it is definitely a big bill. There's a lot to it, and there's a lot to unpack. So we're trying to kind of give you some of those simple, bite-sized nuggets of what we think will affect most of the folks that we talk to. A lot to unpack here, and happy to give some more clarity as to what's changed for everybody and some of what stayed the same.
Great. If this is your first time watching our Elements in Focus, usually myself and one of our advisors or our advisor team, we're unpacking our 5 critical elements. And this week it's focused on tax planning. So we're going to talk through some of those changes. As you can see, the first change, if you've been an FEG family for some time now, back in 2017, the Tax Cuts and Jobs Act was enacted, and we're reduced our marginal tax bracket. So our 15% bracket went down to 12, the 25 went down to 22, all the way up to 39.6, it went down to 37%. For the last couple years, we've been talking about the sunsetting of the Tax Cuts and Jobs Act. Well, that is now made permanent. So those marginal rate deductions will stay. And permanent means that Congress in the future will have to vote to change it. Sunsetting meant that it was just going to revert back to the old tax code. Now it is permanent. So that 12% marginal, the 10% marginal bracket stays, 12, what is it next, Sam? 22, 24, all the way up to 37% if you're blessed enough to be in the top tax bracket. We'll still address those things. Roth conversions are still going to be a permanent, a big part of what we do and a talking point. But those Tax Cuts and Jobs Acts are now permanent. Sam, I'm going to turn it over to you to just discuss a little bit about the SALT tax deduction and what that is.
So SALT, for those that are unfamiliar, stands for state and local tax. And there was a state and local tax deduction of $10,000 previously. That has increased to $40,000. There is a phase-out limit for incomes above $500K. So for the vast majority of folks that we talk to, this isn't going to have a big change for them. But for some folks, it will. It'll have a dramatic effect on what their tax return looks like. So that's SALT tax deduction. Aaron, I'm going to pass it back to you so you can chat a little bit more about what's going on with the estate tax exemption.
Thank you, Sam. So the estate tax exemption has now been made permanent as well. And so just a brief explanation on what that estate tax exemption is if you have an estate that is currently over $15 million and you're a single filer, you could have some form of your estate subject to federal estate tax. So let's say your estate was worth $17 million and that exemption's $15 million, $2 million above that would be subject to federal estate tax. And that's at about a 37 to 40% rate. So a very high tax rate there. Now, if you're married, you can combine that. So each person gets $15 million apiece. So you can have an estate that is worth $30 million, and that will adjust for inflation. The other nice thing about that is you can combine it. So if you have a spouse that passes away and only uses $2 million of that estate tax exemption, you still have the ability to use a $28 million exemption. Now, that's a lot of money, but there could be one off instances where maybe after a spouse passed, they won the lottery and all of a sudden now they've got $100 million of net worth. Just making sure that you're using a form to file the estate tax to make sure you can combine that. So that is made permanent. There was a lot of talk about that getting pushed back to pre-Tax Cuts and Jobs Act levels. It is now permanent. It's increased to 15 million. Sam, I'm going to throw it over to you to talk about the additional senior tax deduction. That is in addition to the regular standard deduction.
Thanks, Aaron. Yeah, the senior tax deduction is something that we've probably gotten the most questions on since this bill has been signed. So everything goes into effect in 2026, but it will affect your 2025 taxes. So for folks
Mm-hmm.
that need some clarity on that, this deduction will be something you'll be eligible for when you go to file your 2025 taxes. So what the additional senior deduction is going to do is it's going to give you, if you're a single filer, an additional $6,000 of deduction, and that will phase out at a modified adjusted gross income, or what we refer to as MAGI, of 75,000, and that doubles if you're married filing jointly. So 12,000 of deduction for a modified adjusted gross income of 150,000. And for those of you that are less familiar or need some more color on what a modified adjusted gross income is, that's just a calculation where they use your adjusted gross income, which is the combination of everything that creates that, and then they're going to add back certain things that may have been removed from your AGI, such as tax exempt interest and items like that. So, something to be mindful of when you're thinking about how you're investing your money, how you're recognizing certain gains in certain accounts, or how you're creating income inside of your portfolio. This is something that is a potential benefit if you can limit how much of that shows up on a tax return. That will phase out in 2028. So this is a short runway. It's not something that's signed into law permanently here. So that is the senior deduction. Aaron, I'll pass it back to you for the child tax credit increase. And
Great. One thing with the senior deduction is the qualification to be a senior is age 65.
yep,
So it's 65 and older. If you're over 65, you will be eligible for that. A little bit of maybe misconception where there's talk about no tax on Social Security. For the vast majority of people, their Social Security will not be taxed because of these additional deductions. I think it's somewhere in the 85 to 90% range of the taxability on Social Security will be very, very minimal. So just wanted to clarify, if you're 65 or older, you can use those. The child tax credit is really simple. In the Tax Cuts and Jobs Act, we added a child tax credit. It took place of the exemptions that you used to get on your filing for your tax return on your 1040. So that has increased from $2,000 per child under the age of 17 to $2,200, and it will adjust with inflation each and every year from here on out. Again, we've used this word quite a bit. That is permanent, meaning it will not go away unless it is voted to go away. So all of these things that Sam and I have talked through today are permanent things, with the exception of the senior tax that goes away at the end of 2028. As I mentioned, there is a lot of stuff that has changed with businesses. Don't get Sam and I wrong. We pay attention to that stuff. We talk about it. We understand it. It's just not something that we need to discuss today. So there's a lot of change with our business owners. Some things have been made permanent. We will discuss those in our meetings with the business owners that we take care of as how they would affect you. Sam, anything else you want to add before we wrap up?
I think you kind of put that beautifully, Aaron. We are just trying to cover small cliff points in a bill that's called big. right? So
Yeah.
we are doing this for a general audience that we think affects most of the viewership that we have for this series, but there will potentially be things that will be specific to your situation, and your team here is very, very knowledgeable about who is going to be affected by what, and we'll make sure to have those conversations one on one. So if you ever need to have a discussion with any of us, feel free to call into the office, send your advice team an email, and we are more than happy to bring any additional clarity you need on this subject.
Great. Thank you all for tuning in. If you're watching this for the first time, please schedule a Next Steps complimentary meeting with FEG. You can call us at 800-928-4001, scan the QR code on the screen, or send your questions to talktofeg@yourlifeafterwork.com. In that Next Steps meeting, we will take an hour and a half to give you things to think about today, things to think about in the future, and if we decide to partner together, a written plan on what FEG will do to help your situation. So scan that QR code, schedule a meeting. One of our advisors will be more than happy to help you out. Thank you so much for watching. Have a blessed day.
A blessed, big, beautiful day.